Back to you.
All right, Rima, thanks a lot for that. SP Tulsian and Mayuresh Joshi are also with us. Mr. Tulsian, good afternoon. First, a word on the new listing of the day, advanced enzymes, and at current levels, what should an investor do?
Anuj, I am keeping very positive view on the stock, and if you have maybe about 2 or 3 years view, probably this will prove to be the best stock, to give the investors returns. And if you really see the kind of behavior now, actually the stock has seen a oversubscription of closer to about 390 times in the HNI category, and we always see that in the last half an hour all the trades have to get liquidated. So if those who have a medium term view at least of 6 months, and if they get to see a price of 1175, I think, or maybe 1160 to 1175, that makes a very good entry point. Because if you really quickly come on the financials or maybe the fundamentals of the company, having seen an EPS of 36 rupees of FY16, I am expecting company to post an EPS of 47 rupees for FY17, 60 rupees for FY18, and 19 for FY19. I am expecting it to be anywhere between 78 to 80. So the kind of growth which we will be seeing, CAGR on the bottom line of more than 25%, will always be seen, giving a very good discounting to the stock. And as I said that if you have 48 rupees EPS, I won't be surprised at why you should not have a discounting of maybe 32, 33 or 34 times. So maybe with a medium term view over 6 months, I am expecting that share can move to a level of 1500 rupees as well. But this makes a very good entry point, because maybe the stock will remain subdued for a couple of days, as I said, that because of this trade adjustments and all that. But once it takes off, I won't be surprised to see it moving very sharply by 100 to 150 rupees as well in the next 15 to 20 days. Yeah.
Okay, Mr. Tulsian, stay on. In fact, let's stick with this space of some of these pharma and medical companies. Narayana Health is one stock that should be up for you. Very good performance this quarter, a revenue growth of about 20%. Look at that stock, 6% higher now at the high point. Clearly one of the big buzzers of the day. The margins have broken out above that 10% range that it has been in, and it's a profit of 17 crores versus a loss of 63 crores earlier. So now Narayana Health is narrowing the gap between itself and its peers as far as margins are concerned. Some of its peers like Apollo Hospitals have margins of almost 16%, and now Narayana Hrudayalaya is also getting there. Ashutosh Raghuvanshi, the MD and CEO of the company, joins us now to talk about that. Ashutosh, good afternoon and thank you for joining us. It's been a stellar showing as far as your margins are concerned.
Yeah, zone.
Okay, all the best, Mr. Raghuvanshi. Thank you for stopping by and giving us an outlook on your business. That is clearly the stock of the moment. Look at that, 11% higher now on Narayana Hrudayalaya. And just take one look at the volumes as well. Volumes have been spiking up significantly. Mr. Tulsian, I wanted your view on this because, the investment phase of the company is now behind it, and most of the hospitals that they've added over the last 3 years will now start to bear fruit. Do you think that there is a multi-year re-rating that's in place for Narayana Hrudayalaya, or do you think that the best is already in the price?
See, Sonia, if I take a call on these numbers, for the Q1, definitely numbers are looking good, because if you really see the operating profit having risen to 36 crore. But if I compare it with Apollo Hospitals quickly on a broad parameters, still first take a market cap. Apollo Hospital has a market cap of 19,500 crore. Narayana Hrudayalaya has 6,500 crore, exactly 1/3. But if you take a top line, the Apollo Hospital has a top line of closer to about 6,500 crore, while the Narayana will not have a top line of more than 2,000 crore if I just take the current year's performance. And I disagree that the investment phase is over, because investment phase is continuous feature. Even for Apollo Hospitals, having so many beds, is still there into the investment phase. That is why both the companies have interest liability. I am not worried for the interest liability. But come on the earning part, I have my doubts whether the Narayana Hrudayalaya will be able to post the EPS in the double digit. Forget double digit, even closer to 5, 6, 7 rupees will be too difficult, considering 200 crore is the paid up equity as against 26, 27 rupees EPS of Apollo Hospital. So on a pure financial parameters, maybe the turnaround, maybe the growth things because of the lower base may look quite good. But if you really ask me, or maybe given choice, I am always be with the Apollo Hospitals rather than Narayana Hrudayalaya, because ultimately everything boils down to the bottom line also, where we see the PAT of closer to about 350, 360 crore in case of Apollo Hospital. Look into the size, stability, track record. So still maybe the market is giving this kind of thumbs up to the results which are showing. I'm not saying that extraordinary performance has been shown, because even if you take a top line having increased from 428 crore to 452 crore on a sequential basis, and operating profit has risen from 32 crore to 36 crore. So there has been a minor uptick. But on a valuation parameter, if I compare it with Apollo Hospital, still I find Narayan Rudrayala to be expensive. Yeah.
Okay, yes, the stock didn't do too much post IPO. Of course, today the stock has rallied about 10%. The IPO was at 250. So the stock was at around 290. Mayuresh, the other stock of the day has been Ashok Leyland. Do you get a sense that the momentum has got arrested, and do you expect further derating in the stock now?
Afternoon, Anuj. Again, I think I'm always of the opinion that the MHCV sales, specifically in terms of volume growth that we had witnessed over the last 2 to 3 quarters, would moderate, and I think that moderation phase is very much what we are witnessing at this point of time. Can it continue? It very well can over the next few months, but again, I think the expectations is that both on the MHCV part, whether it's the truck business or the passenger business that Ashok Leyland caters to, you will see rebound probably happening in volume growth in the second half of this fiscal, largely around Q4. Having said that, probably even the discounting levels that we have probably been used to, I think that will slowly and steadily start coming down as the volumes start picking up, based on a whole host of factors, whether that be good monsoons, whether the pay commission recommendations, the expectations of more spending coming through, both on the commercial side as well as on the agri side. So having said that, I think my own sense is that the volume growth should rebound in the second half of FY17 and pick up in FY18. The margins probably should stabilize around these levels, and though you might see some blip happening over the next few months, my own sense is that the earnings catch up will be seen in FY18. So again, I think as a story, I think I remain optimistic.
Okay, still optimistic on Ashok Leyland, maybe giving it a slightly longer rope and waiting to see what the next couple of months throw up. But it's been the second consecutive month of weak sales, so that's why the stock is down 3.5%. Let's do one thing, let's take a break. We'll come back and chat some more about the markets. The index may be flat, but there's plenty happening in the broader markets. But our closing bell money control question of the day is very interesting. Sanjeev Prasad of Kotak Institutional Equities told us it is a weird bull market and he hopes that normalization is not painful. Do you see a painful correction ahead? Log on to moneycontrol.com, post your responses there, and we'll read out some of the most interesting ones post 3:30 today.
I just hope, this normalization, whenever it happens, is going to be less painful than what we saw in 2008, 2009. Well, I guess it's pretty painful at this point in time, in the sense, you have a bull market in a way, but you're not really getting any new money to manage. If anything, you are struggling to retain whatever funds you have got at this point in time. So it's a weird kind of bull market, where I don't think anybody is really very happy with the appreciation in stock prices. You're feeling very uncomfortable about valuations.
Welcome back. You're still watching NSE Closing Bell here on CNBC TV 18. The market may be flat, but fret not, because we have a lot of big stories breaking right here on our channel. Before that, just take a look at the charts of some of these steel companies. Jindal Steel and Power has suddenly zoomed once again. It's doing what it does best these days, which is rising. So post 1:30 in the afternoon, that stock has had a one-way rally. That's JSPL for you. Look at that phenomenal move. And Tata Steel in the last 10-15 minutes too has found some new wings. So Tata Steel too has moved to the high point of trade. But let's get some breaking stories going now. We have two of our colleagues who join in, and since I was mentioning Tata Steel, we will first talk about Tata Steel. In fact, both Nitya and Nisha are with us to give us two stories in two of the commodity spaces. So girls, welcome. Let me start with you, Nisha. Tata Steel is the stock that's really buzzing right now, and I understand that the company is moving forward with the sale process of a part of its UK assets. Tell us what you're picking up.
Oh, that's right, Sonia. In fact, sources have confirmed to CNBC TV18 that this process is going on fast. In fact, the 3 units, those are downstream units connected with Port Talbot unit in the UK, are the ones in which sale process is now taking shape. In fact, it's entering the second round of bids is what I am told by sources directly in the know of the developments there. They've also confirmed to CNBC TV18 that Tata Steel has communicated the shortlisted buyers also. So there could be 1 or 2 buyers in the fray which have been shortlisted. What I'm talking about here is £100 million which can really come into Tata Steel by way of the sale of these 3 downstream units in the UK in places like Rotherham, Stocksbridge as well as Hartlepool. Now this is related to Port Talbot, but remember Port Talbot is something that Tata Steel is not looking at selling at the moment, is what sources tell us. Though I do gather Excalibur as well as Liberty House, which have been in the fray to buy out these assets, really are keen to buy Port Talbot because it is a backward integration to the 3 units which are being sold at the moment. So yes, second round of those bids are expected to start and it is reaching some sort of a consummation for Tata Steel.
Okay, thanks for that. In fact, that story has really spiked up the stock. It's up 3% now. Deleveraging plans for Tata Steel. So I'm going to toss that question to Mr. Tulsian. But before that, we also have our colleague Nitya waiting by. And from metals, it's on to solar energy. It's solar power all the way, as clean energy is finding favor with not just the Modi government, but most top corporates as well. Top sources have told CNBC TV18 that the cabinet will soon consider a proposal for doubling of solar parks to facilitate 40,000 megawatts of solar power in the next 4 years. Nitya is here to tell us more. Nitya.
Well, the government, remember, has set itself an ambitious target. We are talking about 100,000 megawatt of solar electricity that has been committed by the Modi government in the Paris talks by 2022. And so clearly the government is pressing the pedal on that front. We are talking about significant interest from across corporate sector is what we're picking up from sources, which is why the cabinet is likely to take up that proposal very soon in the next 4 to 6 weeks of doubling of solar parks. What we're given to understand is that they've identified sites across the states, and it will be 25 more solar parks that are likely to come up to facilitate 40,000 megawatt of solar power electricity by 2020. We're given to understand that amongst the corporates, there are names like Adani, Tata Power, Indian Oil Corporation, Coal India, NTPC, Neyveli Lignite, amongst others, who have evinced interests to various state governments for participation in this particular mega project. And what we're given to understand is that for ensuring smooth transition, state governments have been instructed by the centre to identify sites and ensure that forest, environment and land clearances come in place. Now, when you talk about the states that the sites have been identified, we're given to understand from top government sources, it's the likes of Telangana, Andhra Pradesh, Tamil Nadu, Kerala, Gujarat, as well as Madhya Pradesh, where we will see these solar parks coming up very shortly indeed. And remember, with this prior environment, forest and land clearance in place and the kind of initiative from the government to ensure that there is a tariff cap as well, definitely it will be interesting to see when this cabinet of course goes ahead and gives the green signal to that particular proposal.
All right, Nitya, thanks a lot for that. Let me take the first story of Nisha to Mr. Tulsian. Mr. Tulsian, I remember when this whole UK limbo was going on, you were not too positive on Tata Steel. And the stock has corrected, but it's now again making a move back towards its previous highs. Do you think it's an exit opportunity, any kind of positive news flow, or do you think the stock can meaningfully rise from here?
See, Anuj, this should definitely be used as an exit opportunity, because what I have been maintaining specifically in respect to the exit from the Europe business for Tata Steel is that they are not fetching anything. Even if I just rely on this story now, what kind of realizations or what kind of money receipt we are talking of, 100 million pound, that is 1,000 crore rupees. I don't think that these kind of things, can be reconciled with the fact that the company will not be making losses from here on. Here it is not the question of what will happen to the debt which has been existing in the books of the company to the extent of 80,000 crore. Mind it that the company, the units, so the Chorus was acquired by Tata Steel in 2007 for $13.2 billion. And in fact, for that they have drained so much of their investments and funds and all that, and just to say that we are getting rid of a loss-making company even at a nil cost, I am not there to subscribe to this argument. Now come on this specifically in respect to the other companies like JSW Steel and all that. See the kind of performance they have. have all been reporting EBITDA of 9,000 rupees plus 9,200, which you have not heard of. I doubt that kind of performance will be shown by the Tata Steel for their Indian operations also. I will be definitely expecting an EBITDA of closer to about 8,000 rupees per ton, and see the effect of that reflecting on the Indians also. They have been going very slow. They just completed 2.4 million ton at Kalinga steel plant, and thereafter they have stopped it, that they won't be taking up the further capacity expansion in India. You have opportunity existing in India. So overall, the weight of the chorus steel is going to continue on the steel, and I am not too happy just merely on the pretext that they are exiting from the loss-making operations. They are not exiting totally from the Europe operations. Apart from that, Southeast Asian operations also continues to see the problem of the viability. So overall, honestly, if you really ask me, I don't see any reason. With this, I have been really saying for last 1 year that if you want to remain in a steel stock, it is JSW Steel, when it used to rule at 700 rupees or so, and the stock has already risen to a level of 1700. So if you have any compulsion to remain invested in the Tata Steel, do it. Otherwise, I think that this is the right time even now to exit from Tata Steel and move to JSW Steel kind of stock, or even if you want to remain in the steel or the ferrous steel industry only.
Oh yes, that's been your view for a while, that use every opportunity to exit Tata Steel. That's some positive news coming in from Crompton Greaves. They say that there's been no impact to their manufacturing facilities because of the fire breakout that they had at the Kanjurmarg unit. There were no casualties or injuries, thankfully. The fire was restricted only to the office area and the manufacturing facilities were not impacted. Neither were the customer deliveries hampered because the plant operations are as per schedule. And that's Crompton Greaves. That's just spiked up a bit in trade. But let's talk about the stock of the moment, which is ICICI Bank. Before we do that, Sandeep Wagle is also with us to give us a couple of closing strategies. Sandeep, what do you have on your list now?
Afternoon, Sonia. I would go with a buy in of Petronet LNG, stop loss 302, target 324. A buy in a HCL Techno, stop loss 762, target 812. And a sell in a LNT, stop loss 1540, target 1428.
Okay, that's a sell on L&T, and from the high point it slipped quite a bit. As Sonia said, ICICI Bank really is your stock of the day. It's cracked 5% on higher slippages and also lower margins in the first quarter. So we'll do a bull versus bear segment on ICICI Bank. Mayuresh, since you have a bullish view on the stock, what explains the view? Because we have already seen a 35-40% rally from the lows for ICICI Bank, and numbers clearly show that there's a reason why the stock trades at this price to book value.
Absolutely, Anuj, and no two ways about it. So for FY17, if I largely take into account the kind of slippages that we witnessed in quarter 1 FY17, 8,250 odd crores versus 7,000 odd crores in Q4, it is front loaded as the management was indicating. Secondly, I think if you look at the composition of the slippages, 55% came from the watch list of 44,000 odd crores, which has now come down to 38,700 odd crores, with around 4,500 odd falling into the slippages category. 16% from the restructured book, and the fresh slippages that have come from standard assets are close to 2,370 odd crores. Now again, I think the management is extremely hopeful that 1/3 of these fresh slippages probably can get reversed in the coming quarters. And again, if you look at the credit cost, they're extremely elevated at around 2%. They're expected to remain so for FY17, considering the recognition that has to be done. But largely, I think over FY18, as the recognition starts happening, the credit cost starts dwindling down, the loan book, specifically on the retail advances, which has actually grown at 22%, and the management overall is confident of a 15% loan growth, which in our view, or my view, is again very cautious, I think, because of sluggish corporate loan growth. The retail advances should be quite robust. Thirdly, I think the kind of compression that you've probably seen in NIMs for the whole host of these factors that we witnessed might very well continue. So again, for FY17, I'm not saying that there can be a huge amount of recovery. The calculated NIMs can be between 3.24 to 3.26%. But with asset quality getting recognized, with credit growth improving, you're probably expected to see the absence of interest reversals, probably ensuring that the NIMs expand. So again, on a price to adjusted book, we feel that at 1.4 times, it is quite attractively priced price. The downside risk might be evident over the next few months as the asset quality probably starts getting recognized. But largely, my opinion is that over FY18, as credit growth picks up, as we see tremendous growth in retail advances, as a whole host of recognition on the corporate side gets largely over, you'll probably see expansion in earnings takes place. So again, I think the downside risk, in my opinion, can be limited. If it corrects, I think it becomes a great opportunity for long-term investors.
Okay, yes, but the problem is that the process of recovery has taken so long, and now with this quarter's earnings, it only seems like the process is going to be longer. Mr. Tulsian, come in on this. The other problem that the stock has is over ownership. Anyone and everyone has bought into ICICI Bank in the last 6 months, hoping that they could be a part of that impending recovery, and that has not played about. Would that concern you?
Sonia, that is one of the concern. But if I first come quickly on the fundamentals, let's not take too many metrics, to analyze the results. First, straightway come on the operating profit of a bank on a sequential basis, because from where the efficiency, everything boils down there, in terms of the credit growth, in terms of the increase in the net interest income or the spread and whatever we may call it. And if you see, the operating profit fell to a level of 5,200 crore sequentially from 7,100 crore. So see the sharp fall. That means there has been a big problem with their core business. Now come on the net NPA, again increased by about maybe 37 basis point to 3.35%. Now come on the absolute number. We are talking of recovery, we are talking of slippage, we are talking of provision, we are talking of the hopes of faster recovery, credit of 13%, 14%. Everything gets reflected and boils down to the numbers. Come on the provisions. What kind of provisions has been made in Q1? 2,500 crore plus, which was 3,300 crore plus in Q4. Everyone knew that Q4 was the worst. If you take the PSU banks, probably the provisions having made by all PSU banks, the provisions in Q1 is seen to be at least 1/3 or maybe even 25% of what has been provided in Q4. Similar kind of, I'm not saying that similar kind of pain was there in Q4 with ICICI Bank, but reduction in the provisions just by 25%, while the market was expecting it to fall at least by 50%, I don't think is comforting at all. Come on the absolute GNPA number, gross non-performing assets, 27,000 crore against 26,000 crore sequentially I am referring. I have already referred net NPA in terms of the percentage, but if you want to go on the absolute number, 15,000 crore plus against 13,000 crore plus. So see, if these kind of things are existing, don't need to make any kind of calculations or derive the different kind of ratios. Everything speaks from the absolute numbers, what they report. I can take the slippage, I can take the recovery, I can take the expectations of, and believe me, in fact, this has been, I've been saying this for last couple of weeks, that all PSU banks and ICICI Bank is seen in an hugely overbought position. You are right in drawing that everyone were gung-ho, everyone had taken a long position. Now we are seeing the pain of that liquidation, long liquidation and profit booking post these numbers. Now, in fact, a week back or about 10 days back, I have also, expressed my anger that if the ICICI Bank has to sell the SR Steel exposure of 1,600 crore to an ARC, I think this is the height of, in fact, maybe the PSU banks must be working with a more caution than what we have seen this kind of treatment, at least from a private sector bank, which is seen to be so efficient. So taking all this situation, but even if I confine myself purely to Q4 Q1 numbers, believe me, the disappointment has started with a fall in operating profit, and it boils down to below that on all parameters. So I don't see any reason for me to take as an investment call on the stock, because you can't compare ICICI Bank's performance with all other PSU banks. Yes. There has to be a peer comparison with Axis Bank, Kotak Mahindra Bank, Yes Bank, IndusInd Bank. I forget Yes and IndusInd, or maybe HDFC. No one can match with these three banks. But you have not been even able to match with the second worst performed bank, that is Axis Bank. Even with that, the performance has seemed to be quite deteriorating and quite inferior. So overall, I have no reason to take a positive call on the stock after seeing this Q1 numbers. So
Mr. Tulsian, you will maintain your favorites. Yes Bank has been your favorite. I think Kotak is the other favorite that you've had in this space. Do you think these stocks continue to outperform in the medium to long term?
See, Anuj, if you recall, maybe 6 months back, I just chose 2 stocks. In fact, this was in the month of February, or in anticipation that Q4 numbers will all be bad. And at that time, I've said that I will only be banking on Kotak Bank and Yes Bank. But Yes Bank, I think, has risen thereafter by about 40%. It used to rule at a level of 700 rupees then. Obviously, the Yes Bank has risen so much. In fact, I find that this seems to be in the full, reached to a full value. I'm not saying that I have turned negative, but the valuation at the price which you are prepared to pay, looking to the performance, also has to be considered. So considering the present price of Yes Bank, I won't be taking a fresh entry. But yes, if you really ask me amongst all the private sector bank, probably I'll go with Kotak Bank, because the kind of results, I'm purely based on the results review, the kind of, I'm not saying that IndusInd Bank has not performed well, I'm not saying HDFC Bank has not performed well, I'm not happy with the performance of Axis Bank, but if you take the results scenario, or even for that matter, add the smaller banks like Karnataka Bank and Federal Bank also. So probably Kotak Bank, finds to be the best looking to the price and the Q1 performance having posted by all these private sector bank. So I'm keeping positive stance maybe for next 3 months, 4 months on Kotak Bank at this stage amongst the private sector banks.
Okay, well, since we're talking about that, one bank that's spiking up from the broader markets now is Lakshmi Vilas Bank. It's certainly moved to the high point. So just take a look at the intraday chart of Lakshmi Vilas Bank. It'll be up for you in moments from now. We also have a couple of these result reactions. Questcorp had a very good showing this time. And in the last 10 minutes, that stock has just zoomed to the high point. Lakshmi Vilas is now up 7%. Questcorp is now up 16%. Just look at that momentum that we're getting in Questcorp. All this just after, 1 o'clock or 2 o'clock in the afternoon, and Havels is the other one that has spiked up to the high point of trade. So if you got your stock right, you would have made a lot of money. That's how we at CNBC TV18 are going to help you, because we're going to give you a list of stocks that you can keep on your radar before the numbers come out. Vandar Bansal joins in. He's been sifting through all of the stocks in the mid-cap space. Vandar, what do you have?
Well, UFO Movies will be declaring results tomorrow, so keep an eye on this company. Important to see whether all these big releases which happened, which we have been talking about, whether that has any impact on the financials of this company or not. A lot of block deals, a lot of fund buying happening in UFO in the last 15-20 days ahead of the numbers. JM Financial, that stock is down 6-7%. Most of these mid caps, like JM Financial, that stock has moved from 50 rupees to 65 rupees in the last 1 month, along with all of the brokerage stocks. Brokerage has done well in this earnings season, so keep an eye on JM Financial. People are expecting some announcement as well along with it, but as I said, most of the stocks have run up 20-30% in the last 1 month or so, so that is one caveat. EIH, East India Hotel, is another stock to watch out for, clearly because all the hotel stocks have done well. This is one company where we have seen sales have been growing, but in terms of profitability and EBITDA, no improvement was there since last 3 or 4 quarters, so that could be important to watch out for. 2 other stocks which I'll be watching clearly will be, one is Voltas declaring results tomorrow. Look at the build up in the F&O today. The stock is up 5 or 6%, but there is nearly 40% build up seen on Voltas in F&O market. And Delta Corp declaring results today. That stock should be important to watch out for, because in the last 2 quarters they have given very, very good sector numbers.
Okay, Varinder, thanks a lot for that. So that's something to watch out for. Yes, Voltas clearly is the stock of the moment right now. In the F&O market, it's added 40% open interest. Mayuresh, Voltas, it's been a phenomenal performer, but at current levels, do you think it still warrants a buy?
Now again, Anuj, I think it will largely depend on how the performance will be, and as Varindra was pointing out, I think the results will be key. Now, if you go by last quarter's performance, the EMP segment performed exceedingly well, and a whole host of legacy orders are actually probably out of the book. So you're probably expecting margin expansion to steadily increase on that component. What will really stand out for Voltas will be its UCP division, the room air conditioning market, and with the kind of extended summer that we had witnessed, our own take is that the number of units sold in absolute basis and even on a quarter-on-quarter parameter should actually improve. So in that sense itself, I think you're expecting an EBITDA expansion probably to take place for Voltas on both these counts. When it comes to earnings on the larger picture of the next 2 years, I think the earnings growth should be quite stupendous, with both UCP and the EMP segment contributing, and a whole host of onerous cost overruns that we probably had witnessed in the Middle East region probably getting over. So again, I think largely it would be number dependent, but again, I think expecting good set of numbers to come through.
Okay, expecting good set of numbers to come through from Voltas. Look at that stock. There's pre-buying ahead of the numbers tomorrow. Thanks, Varinder, for spotting all these stocks for us. We'll take a short break. When we come back, we'll try and get you a check on what's happening in the dealing rooms. And also, we'll be 15 minutes into the end of trade. So we'll just get some more opinion on the market. Stay with us.
Welcome back. Well, don't let the headline index fool you, because it's been all about individual stocks yet again. The mid-cap index, in fact, is outperforming 1%. All through last month, we saw mid-cap outperformance, and the new month has started again with big outperformance from the index. Some stocks that stand out: India Bulls Real Estate. If you see the intraday chart of that one, that stock is now trading at high point of the day. Or near about high point of the day. The other one is Federal Bank. That's also seen a big rally. So from the low point, that is. And the other one that stands out is IIFL Holdings. In fact, IIFL Holdings has been re-rated over the last 2 weeks or so. In the last 2 weeks, it's gained 30%, counting today's 8% as well. Let's do one thing. Let's get you some BTST ideas as well. Mitesh Thakkar is still with us. Mitesh, so what are the ideas? I think you're going with one buy and one sell.
Sorry, can you repeat that?
Yeah, your BTST calls. One buy, one sell?
Yeah, sure. So I have a buy on Wipro. I think the IT pack is reversing from lower levels. We had a technical call on HL Tech earlier. Wipro can be bought with a stop just below 555 and look at targets close to about 569, 570 for tomorrow. Slightly aggressive or a bolder call, which is a sell call on Reliance, is breaking below some kind of a negative pattern on the intraday chart. So keeping a very tight stop at 1014, 1015, I would suggest sell this one for targets of around 995, 996 for tomorrow.
Okay, thanks for that. So there are some more buzzing stocks. Motherson Sumi, that stock is up about 2% on the 3rd of August. Motherson Sumi is having a board meeting to discuss some fundraising. So that would be very interesting. There are a lot of theories doing the rounds about any possibility of an acquisition, etc. Remember, the Motherson Sumi earnings will come out on the 10th of August. So before their earnings, they're having another board meeting, maybe some important announcement, and that stock has been spiking up. But on that note, let's get an insight into what's happening in the dealing rooms this afternoon. Nimesh Shah is here with Trader Talk. Nimesh, it's an action-packed market. You know, the headline index does not reflect that. But what are dealers talking about?
So volatile day of trade, summit of profit booking surely at higher level. So 8750 is acting as a very strong resistance on the Nifty. But the sense I'm getting is now there is a bit of churn as well within sectors. So banking has stood out for some bit of profit booking after the big run up that we saw in most of the bank stocks. And clearly the flows are still strong within the large institutions as far as the ETF money is concerned. So that flows still continues to chase the Indian stocks. Today, I guess the money is largely flown into the large cap IT names. The sense I'm getting is there is one large Japanese fund which is seeing a lot of inflows, and that's actually playing out in terms of large cap outperformance sector by sector for the last few days, and that's something which stands out in today's trade as well. Clearly, the big outperformance is coming in the individual stocks. The mid cap continues to outperform. The sense I'm getting is maybe around these levels of 8750, you might see a bit of a sideways move on the Nifty, but the momentum is clearly with the bulls. You will see some bit of action in the mid caps and small caps to continue. But I guess there is more of churn now within the sectors as well. So there is one bit of a bit of caution warning coming in the NBFC space. So I guess that explains the kind of move you've seen in the proxy financial names, the likes of Edelweiss, the likes of IIFL. But clearly the flows are still pretty strong. The momentum is there in terms of ETFs. And I guess today's move in the IT is largely on the back of strong buying coming in by a very large Japanese fund into the large cap IT names.
Okay, Nimesh, thanks a lot for that interesting tidbit on that reason for IT stocks rallying. So that's really been the other story of the day, the way TCS has rallied in trade today and has carried the markets. In fact, the Nifty IT index up about 2%. Varinder is still with us for a list of buzzing stocks. Varinder?
Well, new names, Kovilpatti Lakshmi Roller Mills, Sunshield Chemicals, Connaught Engineering, high energy batteries, they are gaining and on good volumes, all of them. It's all about results. So, on the positive side, you have Quest Corp, Sonia, you mentioned about that, Ricoto, Terra Software, Shilp, Gravures, PNB Gills, Gujarat Ambuja Exports, and Narayana Hrudayalaya. And on the negative side, you have NCL Industries, Asahi Songwon, Kokyo, Camillane, Mangalam Drugs, JM Financial ahead of the results, and VSC Tailors, where we saw a sharp erosion in margins. Small cap gainers, you have GMT Auto, Smiths and Founders, JSL Stainless. That stock has been buzzing since the last many days. Radhe Developers India, Sahara Housing Fin, Diamond Power, Tilaknagar Industries. Some of the spinning companies are doing well today. So Amarjyoti Spinning Wheels, Surya Lata Spinning Mills, both are up today, and Lincoln Faba. Among mid cap gainers, clearly Dwarike Sugar has to be the stock. That has moved by nearly 15-16% on huge volumes today. Muthoot Finance, after the results, the stock is up nearly 25%, 10% up today. DCM Shriram Industries and Cholamandalam Investment, again, even post results, the stock is moving, I think, up 5-6% today.
Okay, thanks for that. So we'll discuss all of these stocks and more with our next guest who joins in. P. Funny Shekhar is also with us. It's a packed house this afternoon. We have SP Tulsian, Mayuresh Joshi, Sudarshan Sukhani, and Mitesh Thakkar who've also been sitting by. Funny afternoon. What are your thoughts on Quest Corp? That stock is up 16% now post its earnings. Is that a stock that you track, and any recommendations here?
Not really tracking that, Sonia.
So anything else from the mid-cap space that has caught your eye that one can buy into now?
Well, I think the valuations are not really comforting at this point in time. I can at best think of a few housing NBFC names because the growth there secularly remains, moderate to high. And to that extent, even if you go wrong by a few notches on the valuation, you should be all right. Other than that, maybe a few mid-cap FMCG names, but I can't think of many. I would like to be extremely cautious in this space.
Funny, hi, good afternoon. A word on Bajaj Finance. Is this exuberance justified? We now have a market cap of 60,000 crore. In just last 1 month, it's gained 40%.
Well, with the disclaimer that we hold it in our portfolios, Anuj, I can understand, your question from the sense that is it a good time for new investors to invest? And I think one should be, cautious. It's a good stock, a marquee name with excellent track record of profitability and growth, something that you have found it difficult to see over the last 3 years. Consistency has been its hallmark. But at 60,000 crore market cap, one indeed has to be extremely careful, and I would not advise anyone to put money in this stock at this point in time. For those who are holding, I think they can enjoy the ride. But again, this is a good stock that one can think of buying on declines.
Okay, good stock that one can buy on declines. Well, if you've missed out on that stock, then I pity you, because that's been the big mover really over the last many years. But Mr. Tulsian, I wanted to ask you your views on Crompton Consumer, because that stock is seeing a big move right now. You have told us in the past that you prefer Crompton Greaves to Crompton Consumers, but now at this juncture, what do you do with a stock like Crompton Consumer?
See, Sonia, looking to the results, definitely the results are looking quite good, and now people have started comparing it with, rightly so, comparing it with maybe less stocks like Havells and all that. But if you really take the valuation and maybe the situation, because let's not forget that I don't know how many of them have tracked it, but the kind of reporting, which the company has shown, FY16 is a 6 months performance, and people probably have got misunderstood that the growth can be 4 times, while it will be a marginal growth. That means the growth could be double, but because the FY16 numbers were only representing 6 months, because I've talked to I got many of the queries also where it has been said that the company will show a growth of 100% plus, but it is not so. And yes, the things are, the one thing which I didn't like about the stock is that still the company is carrying that debt position, or they have the interest liability, while if you recall when it was a consolidated entity, there was no interest or debt element in respect to the electrical business for which the company is engaged into. So keeping a mild positive view because of the good numbers, Q1 numbers seen from the company, and overall FY17 numbers will going to be good, and the kind of run-up which we have seen in the peer stocks like Havells and all that are giving a good valuation to the stock as well. Yeah.
Okay, the other stock that's moving is Hindustan Unilever. Pull out the intraday chart of that one, and actually it's silently moved up a bit over the last couple of days and has moved to within 2.5% of its previous all-time high. So that's HUL at 927. Sudarshan, technically, how's Liver looking?
Liver is looking very fine. and going towards 1100. Now that 1100 won't come if the Nifty goes through a correction, but it will come sooner or later, because even the Nifty's correction would be short-lived if that comes about. I would be a buyer at current levels in both cases. If I'm a position trader, want to hold a position for a few weeks, and if I'm an investor.
Okay, the other one is Tech Mahindra. Mitesh, you spoke about Wipro as BTST idea, but what about Tech Mahindra?
I think the entire IT pack, has been reversing. Tech Mahindra is a different chart in the sense that it's been declining for last few days, underperforming, and now trying to bounce back from oversold levels. I think the first upside could be around 500, 502. If we start getting past that, then I would look at a slightly stronger and a bigger reversal.
Okay. Well, today is actually a very good day for the markets, very good day for the bulls. The headline index may not reflect that, but if you look at the non-index stocks, there are so many stocks hitting 52-week highs today, and all your erstwhile favorites. So just look at the charts of names like, VIP, Havels, Petronet LNG, SRF, CCL products. All these stocks are at new highs, and all of these are trader favorites, investor favorites coming in. So Anuj, give and take everything, although the headline index may not reflect it, but there's been a lot of money making that's taken place today.
Hey, the market has given 3 lessons today again, Sonia. First is that if you have a big gap down at index level, you are risking by taking a long call at that point. This is still a market in which you got to wait patiently for dips and declines to buy. The second lesson has been that this is still not a market in which you want to aggressively short, because at lower level there's still quite a bit of buying. From low level, for example, the Sensex has pulled back 150 points yet again from the low point. And the third has been that forget all of that, it still remains a bottom-up stock picker's delight, and which is what you want in stock markets. And at the end of the day, it should be about individual stocks. Though I must say that a lot of stocks are now reaching exuberance territory. Great respect for stocks like Bajaj Finance, companies like Bajaj Finance, but hand on heart, that if you're buying now, you are vulnerable to even a 15 or 20% mark-to-market correction in your portfolio. So that's the risk that you're taking even at individual stock levels. Though of course, you'll keep finding some of these stocks like Rico Auto today. Some other stock will come back tomorrow and it will rally. So if you identify your stocks right, good for you. This market is still rewarding, but at index level, you're taking a bit of a risk.
Oh yes, and this market is rewarding patience, I think, more than anything else, because now a lot of the stocks that were a bit dormant for the last 3-4 months have started to come back into action, whether it's VIP, SRF, Petronet LNG, and names like that, all sitting at new highs. Mayuresh, wanted to ask you about these stocks. Anything that you like from this space? Names like SRF, Havels, VIP, etc.
Sonia, I think one really needs to be extremely selective, and again I think it's that classical argument how valuations have probably peaked up if you look at the last 3 to 5 years average. Having said that, probably I think the numbers itself will lay testimony to the fact, and the management commentary on how the expectation and the outlook for FY17 and thereafter pans out for these companies. And if we generally see, I think the buoyancy in the markets is based more in terms of getting after mid-caps at this point of time. So I think valuations is going to be extremely key when you're probably chasing stocks. So I think you need to be extremely stock selective at this point of time, and whenever you're buying, I think you need to wait for dips, as Anuj was saying, and probably buy in a very staggered manner, because that will reduce your impact cost, and that will increase your chances in your return on investment over the next year and a half, far greater than buying aggressively at one point of time.
Okay, just about 1.5 minutes left for markets to close, so let's just do a quick recap of the day's action. Index wouldn't have given you much today, though intraday there was quite a bit of volatility. So you're seeing 6 points uptick, but the Nifty went to 8,700, almost came back to 8,600, and is closing somewhere around 8,650. It's been that kind of a day. In terms of individual sectors, clearly the trade today was money moving from banks to IT. It could be a one-day affair or could be start of something big. That's something that we'll find out. But the IT index was up 2%. The bank index was down about 1%. So just keep an eye on that. So there was a relative 3% difference between the bank Nifty and the Nifty IT. In terms of individual stocks, HCL Tech, TCS, Wipro, Infosys, these were the stocks that propelled the market and the bank Nifty and the Nifty IT, apart from stocks like Tata Motors, DVR, Maruti, which made a new lifetime high, by the way. Tata Steel and Hindalco did well. Bajaj Auto and Z Entertainment. Z Entertainment also made a new 52-week high, and a couple of others like Dr. Reddy's bounced back a bit. On the downside, stocks of the day, 2 stocks, ICICI Bank and Larsen & Toubro. ICICI was down 5%. Last one was interesting because it started in green territory, but after that there was quite a bit of decline. ICICI spent better part of the day in the negative territory. BHEL, that was down about 3%, Bank of Baroda was down 3%, Adani Ports, Bosch, Kotak Mahindra Bank were other notable losers. But tell you something, this is a market of broader market or individual stocks, and Sonia will tell you the kind of stocks that surged today.
Oh yes, I was very happy with the performance today because there was plenty for the bulls, plenty of meat for the bulls today. The mid-cap index up almost 1%. The advanced decline ratio, this is interesting because the advanced decline ratio closed in favor of declines. So there were still more losers than winners, but in the winning list, if you reported good earnings, if you reported good sales, the market rewarded you handsomely today. So just take a look at the result reactions. Quest Corp up 16% post numbers, Ricoh Auto up 17% post earnings, Narayana Hrudulya up 10% post stellar earnings, Crompton Consumer up 6% after a good set of numbers, SML Isuzu up 6% after very strong auto sales in the month of July. So all of these stocks got handsomely rewarded. Then you had the new kid on the block, Advanced Enzyme, that had a solid listing. It still goes home with almost a 30% gain today, and so many stocks hitting 52-week highs. Havels, VIP, Petnet LNG, SRF, CCL products, all non-index large caps hitting fresh 52-week highs today. So in a sense, it was a very good day for the bulls to be picking stocks, especially long-term investors. So let's try and close this conversation with a couple of calls. So Darshan, any of these stocks that interest you to trade now? Names like Petnet LNG, SRF, Havels.
Well, all of them are at new highs, and to that extent they are worthwhile. But there are some stocks which have retreated today after touching new highs. For example, a stock like Bata, that would probably be one I would be looking at for tomorrow, where today's winners would take a pause, and perhaps the stocks that took a pause will go up. So Bata is in that list, NMDC is in that list, and PFC. The names you said are fine, but these are also at par.
Okay, Mr. Tulsian, Muthoot Finance, it's been doing quite well since its numbers. We all have the example of Manappuram, which of course was re-rated. But do you expect similar re-rating in Muthoot as well?
Yes, Anuj. In fact, Muthoot and Manappuram both are, and you are right. Post the numbers in Muthoot Finance, the kind of and actually the kind of diversification they have all been making in the other areas of the financing also. Now they just can't be called merely the gold financing company. They have been moving into finance, housing finance, microfinance. I agree that the scale has all been picking up, but the kind of performance they have all been showing, and aided by the positive view now building up on these all NBFCs, are really helping both of them. So yes, I will keep my positive stance on both of them going forward.
Okay, gentlemen, we'll have to wrap up this conversation on that note. Thank you, all of you, for joining us and taking us through the last 1 hour. Our closing bell money control question of the day is a comment that came in from Sanjeev Prasad of Kotak Institutional Equities earlier. He said it's a weird bull market and he hopes that the normalization is not painful. Do you see a painful correction ahead? Well, nothing of that is playing out yet, but let's go across to Santosh and find out what the other responses are. Santosh.